all, I am Jaginder Rana. Good morning. I am taking up the topic today. The role of insurance intermediaries. The role of insurance intermediaries. With the provision of easy to understand insurance products tailored to meet the individual needs of the customers, the Insurance Regulatory and Development Authority of India has come up with several reforms in the general insurance business. So the latest circulars of the insurance regulator, that is provision of easy to understand insurance products tailored to meet individual needs of the customers, providing them with ample choices and enhancing their insurance experiences, that has now been enabled. But the shift from rule-based to principle-based regulatory framework facilitates ease of doing business and encourages innovation, enabling reduction in the response time for emerging market needs. Some key aspects of the circular include provisions for offering to wider range of products and customization options, leveraging end-to-end technology solutions to streamline processes, and maintaining transparency in communication with policyholders. This emphasizes the importance of timely and fair claim handling, as well as various requirements for different stages of the claim processes. Different stages of the claim process. Grievance redressal mechanism are strengthened, ensuring timely and fair resolution for customer complaints. So availability of wider choices of products, add-ons, covers, assets, risk properties and liabilities against various perils, exposures and line of business is good for the insurance industry, because possibility of customization of products and flexibility to choose products as per their needs is a requirement today. So introduction of a customer information sheet to provide clear and concise policy details, including a scope of coverage, exclusions, warranties and claim settlement processes, and liabilities against various perils, exposures and lines of business is very important. IRDAI has introduced a significant update by revising the customer information sheet. This enhancement aims to provide customers with a clear and concise overview of their policy. So covering essential details such as scope, coverage and exclusions and the claim settlement process as part of the innovative customers are required to acknowledge this sheet during the policy purchase process. So through this measure, IRDAI aims to enhance transparency in the insurance buying process, which has often been hindered by the complexity of the insurance terms. Now, retail customers can cancel the policy anytime by informing the insurer. Insurer can cancel the policy only on ground of established fraud. The insurer shall refund proportionate premium for the unexpired policy period on cancellation. So strict timelines for settlement of claims, including dates for appointment of surveyors and submissions of their reports. That will be the duty of the insurer to obtain timely survey reports. So implementing strict timelines for claim settlements and survey report is a crucial step towards improving efficiency and customer satisfaction. So by holding insurers accountable for timely processing This measure will reduce delays and ensure that policyholders receive their settlement promptly, reinforcing the reliability of the insurance industry. No contribution clause to be applied in case of multiple policies. Additional options of pay as you drive, pay as you go to be given as first choice to the customers in motor insurance as per the circular. So no burden on the customers for disposal of salvage. The policyholder is to be paid the claim amount, collection of salvage from the customers. This is insurer's responsibility now. So review and reform to enhance the insurance experience for all stakeholders is a continuous process of IRDA. A regulatory environment that empowers policyholders by bringing about transparency and fair treatment empowers stakeholders with ease of operations and facilitates quick adaptation to changing market dynamics as a significant step towards achieving a more inclusive, transparent and efficient insurance sector in India. So the role of insurance intermediaries has become all the more important now because the importance of insurance in modern economies is unquestioned and has been recognized for centuries. Insurance is practically a necessity to business activities and enterprises. But insurance also serves as a broad public interest far beyond its role in business affairs and its protection of a large part of the country's wealth. So it is the essential means by which the disaster to an individual is shared by many. This is disaster to a community shared by other communities. Great catastrophes are thereby lessened and it may be repaired. So insurance enables businesses to operate in a cost-effective manner by providing risk transfer mechanism, whereby risk associated with business activities are assumed by third parties. It allows business to take credit and otherwise would be unavailable from banks and other credit providers, fearful of losing their capital without such protection. And it provides protection against the business risk of expanding into unfamiliar territory, new locations, products or services, which is critical for encouraging risk, taking and creating and ensuring economic growth. So insurance is a financial product that legally binds the insurance company to pay losses of the policyholders when a specific event occurs. So distribution of insurance is handled in a number of ways. The most common is through the use of insurance intermediaries. Insurance intermediaries serve as a critical link between insurance companies seeking to place insurance policies and consumers seeking to procure insurance coverage. Intermediaries, traditionally called brokers or agents or corporate agents or web aggregators or service providers, they offer information and other services in connection with the social solicitation, negotiations and sale of insurance. So over the last 2 decades, many professional intermediaries have developed services that go beyond the services related to the transferring of risk from insured to insurers. Intermediaries now offer services such as the evaluation and implementation of alternative means of funding for potential losses, risk management strategies, and claims management. So the role of intermediaries in the insurance marketplace and the economy is very important because the services provided by intermediaries to insurance providers and consumers is a bridge between them. Now, insurance intermediaries facilitate the placement of the purchase of insurance and provide services to insurance companies and consumers that complement the insurance placement process. But traditionally, insurance intermediaries have been categorized as either insurance agent or insurance brokers So the distinction between the two relates to the manner in which they function in the marketplace. So a player with both broad knowledge of the insurance marketplace, including products, prices, and providers, and an acute sense of the needs of insurance purchasers, intermediaries have a unique role, indeed many roles, to play in the insurance market, in particular and more generally in the functioning of national and international economies. So the intermediary activity benefits the overall economy at both the national and international levels. The role of insurance in the overall health of the economy is well understood. So without the protection from risk that insurance provides, commercial activities were slow, perhaps grinding to a halt, thus stunting or eliminating economic growth and the financial benefits to businesses and individuals that such growth provides. So the role of insurance intermediaries in the overall economy is essential. Essentially one of making insurance and other risk management products widely available, thereby increasing the positive effects of insurance generally, risk-taking, investment, provisions of basic societal needs and economic growth. So there are several factors that intermediaries bring to the insurance marketplace that helps to increase the availability of insurance generally. Insurance intermediaries bring innovative marketing practices to the insurance marketplace. This deepens and broadens insurance markets by increasing consumers' awareness of the protection offered by insurance, their awareness of the multitude of insurance options, and their understanding as to how to purchase the insurance they need. So intermediaries provide customers with the necessary information required to make educated purchases and informed decisions. Intermediaries can explain what a consumer needs and what the options are in terms of insurers, policies, and prices. Faced with a knowledgeable client base that has multiple choices, insurers will offer policies that fit their customers' needs at competitive prices. So this is the most important role of the insurance intermediary, which they provide under the competitive atmosphere. They spread the risk, they reduce the cost of the customers, and they reduce the uncertainty of the availability of the policies. So basically they are with the customers and to bridge the gap between the customers and the insurance companies. Thank you very much.